Welcome to Bloomberg ETF IQ Europe. I'm Francine Lacqua. Over the next 30 minutes, we'll be your guide to the region's thriving market in exchange-traded funds. Everything you need to know about the funds and the flows. Strongest month on record, equity ETFs added more than 16 billion euros of new cash in November, jumping ahead of fixed income for the year. Gold withdrawals pushed commodity ETPs deep into the red. As a peer-reviewed study of the shot developed by AstraZeneca and Oxford University says key questions remain unanswered, we'll bring you the latest on the vaccine news driving ETFs. And changing course as Vanguard closes its suite of smart beta ETFs in Europe. We'll also look at the shifting strategy at the world's second largest asset manager. Now, first thing is first, as always, let's take a look at which countries and sectors have been attracting the money. Our very own Danny Berger has all the details. Hi, Danny.
Hi, Francine. Looking at FFLO Go, so these are ETFs that track European regions. And what's notable here is the unrelenting nature of flows into European ETFs. For the past week, we saw a net inflow of nearly $650 million. The majority of the funds this week, as it was last week, I should point out, coming in from the UK, so over $700 million coming into regions tracking there. I think it's really interesting also to look at the UK and look at the really tactical nature of flows coming in and out of those ETFs. For example, one ETF, its ticker QUID is what it's called, perhaps very appropriately. It's from PIMCO. It's a short sterling ETF. Last week, we saw it have a near record outflow in one day. We started to see that short sterling flow come back, perhaps as Brexit talks are ongoing. That sort of question really impacting that fund there. So it really just shows you how European ETFs, it's not just this exuberance over this value play coming back in, but it's also purely tactical as well. Germany, net outflows, the biggest loser so far this week, 136 million getting pulled out. We should note Germany seeing record COVID deaths, certainly impacting some of the sentiment there, but still overall, those record inflows we saw in November, as of now, continue to be holding up in terms of European ETFs, Francine.
Danny, thank you so much. Our Danny Berger there with the funds and the flows. Now with us, Deborah Furr, managing partner and founder at ETFGI. Deborah, great to have you on ETF IQ Europe. When you look at the funds and the flows, I mean, what's been supporting this pretty record year?
So I think for many investors, it's been the fact that ETFs allow you to get in very small sizes anytime during the trading day. I think they've suited retail investors, financial advisors, and also institutions. And so you've seen that many investors are using ETFs tactically. Others are using them as core holdings. And I think that the fact that ETFs perform really well during the volatile March and April timeframe caused many investors to turn to them, especially after the Fed decided to start investing in them. So that gave a lot of people more confidence in using the products.
Does it mean, Deborah, that actually the only way forward is up? Is this just a market that will grow and grow in Europe?
I do think that ETFs will continue to grow. I'm seeing investors, in Latin America and Asia, across Europe, using the UCITS ETFs that are domiciled here. And I think that regulatory changes in Brazil, the biggest market in Latin America, where they're going to allow Brazilian depository receipts on foreign ETFs, is a big opening up of that market. We've seen investors in Mexico, Chile, Peru embracing UCITS products, especially as core holdings. They tend to use US-listed ETFs more as tactical sleeves. And I think if you look at changes in Hong Kong and Asia, you're seeing a greater adoption of using UCITS, especially with the feeder funds that have changed regulations, where the local regulator in Hong Kong now only regulates the feeder fund and not the primary listing. So I expect to see increasing use of UCITS ETFs around the world.
Deborah, what do people want from ETFs? I mean, is it just because there's so much available that they can diversify, or what's the attractiveness? I know in the US you get tax breaks and things like that, which you don't have in Europe.
Yeah, so I think what people like about ETFs is the fact that you can use them as building blocks. I also think that the firms that are launching ETFs are listening to investors and are very innovative at adopting to ESG. So we've seen, when you look at Europe, Europe actually is the leader in ESG. We account for 53% of the assets. If you were to look globally at the ETF industry, we're at a record 7.58 trillion. Europe only accounts for 16%, and the US accounts for about 70%. So Europe is really a leader in terms of assets and product development. And we saw today that Legal & General has just launched some ESG fixed income. So fixed income in Europe is both equities and fixed income. In the US, it's still early days for the adoption, and I think also out in Asia. But I expect that trend to continue. I also think that thematic, so investors are using ESG to play themes that they think will benefit from post-pandemic environment. So whether that's technology, whether it's healthcare, they're also investing in countries where they feel they've dealt with COVID better. And clearly, the expectation with Biden is that ESG will become a priority there. So we do expect that to grow. And I think that a Biden government will also be more positive and constructive the way it deals with trade and many other issues.
Where do you see that? I mean, you mentioned some of the key themes that we try and explore every week here on the ETF IQ Europe show. But what is the one theme that you think will just bring much more attention in ETF? How much bigger, for example, does the ESG ETF space have to grow in Europe?
I think it's going to grow very significantly. What we're seeing are many investors are switching out of core beta indices into ESGs. So it's not just little bits of dribs and drabs going in, it's now significant changes in mandates. And I think that will continue to happen. I also think another big change is China, Chinese bonds. So people are looking for yield. And with FTSE and Bloomberg deciding to put Chinese bonds into their indices in 2021, we're seeing significant increase in interest in those products. CSOP had a launch about a month ago with 645 million at launch. It got to over $1 billion in size within 2 weeks. So I think that emerging markets looking for yield, and you mentioned smart beta. I think one of the things we are seeing is a move away from smart beta, especially as companies have decided to pay out less dividends. Dividends used to account for about a third of smart beta assets and strategies. And so we're seeing investors move, as I said, more to ESG, more to thematics, and more to countries that they think will benefit from post-pandemic environments.
Deborah, thanks so much. Deborah Further from ETF GI stays with us. Coming up, a peer-reviewed study of the shot developed by AstraZeneca and the University of Oxford says some key questions remain unanswered. So we'll bring you the latest with the developments in the vaccine and try and figure out what that means for the economy, what it means for the markets, and therefore what it means for ETFs. This is Bloomberg. This is Bloomberg ETF IQ Europe, everything you need to know about the funds and the flows, and I'm Francine Lacqua. Now let's get the latest on the coronavirus vaccine. A peer-reviewed study of the shot developed by AstraZeneca and the University of Oxford said some key questions remain unanswered. Results published in The Lancet found the vaccine was safe and effective, but more analysis will be needed to see how well it works in older people. Well, let's speak to our Sam Fazeli, Senior Pharmaceuticals Analyst for Bloomberg Intelligence. Sam, always great to speak to you. Where are we on this AstraZeneca vaccine?
Yeah, hi, Francine. So the data are pretty much, from a headline perspective, similar to what they talked about, the 70% or so efficacy when you combine the Brazil data with the UK data, etc. So, you know, it does tick the box for regulatory approval. But there are questions in here with regards to, as you said, does it work well in old people? We don't know. Anyone over the age of 55, very few individuals in the trial in that one. And then, of course, you have all the issues with the low dose, standard dose, and all that going on. So I do think that there's a lot more that needs to be done to be completely sure about this vaccine and how valuable it is in terms of how efficacious it is. But I think the top line should be viewed as this is something that we can use as a tool to manage the pandemic.
Sam, where are we going to be on vaccines come January of 2021? How much of, will we be in a real game-changing place by the first quarter of next year?
Yeah, so I have to, we need to define what game-changing means. I think we should be in a position to have vaccinated the most susceptible individuals in our society, in the UK and in the US, to hopefully reduce the risk of severe COVID and hospitalizations, etc. So that is quite important, and I think we should be feeling that effect in the first quarter.
Sam, when you look at what it means for lockdowns, what it means for how there's so many questions still about the vaccine. Do you think it will be a bumpy ride in terms of trials and what we find out about the vaccine in 2021, or will it just be encouraging news from now on? I know it's almost impossible to say, but what's your feeling on this?
Yeah, well, I'll go for the little part of that. It's not almost impossible. We've seen now that these vaccines can cause a good efficacy in people. We know that they certainly, across the three vaccines that we've heard about, Pfizer, BioNTech, Moderna, and AstraZeneca, reduce cases of severe COVID and hospitalizations. So that's one common area that we can get excited by, and therefore I expect the other trials to do the same. Maybe Johnson & Johnson's first trial that reads out will be single-dose vaccine. Maybe that won't be as good, but I'm still hoping. And certainly Novavax, I expect a positive outcome from too. What the level of efficacy will it be 70, 80, 90% and all that? I think currently in the bigger context of things doesn't matter.
Thank you so much, Sam Fazeli, our senior pharmaceutical analyst for Bloomberg Intelligence. Now, still with us, Deborah Furr from ETFGI. Deborah, when you look at the leaps and bounds that vaccines have made, they will definitely give impetus to the recovery, how fast it recovers, and therefore to asset classes. Is all the good news on vaccine now already priced in markets?
I don't think so. I think that, it's still a little bit early days. I think we've clearly seen the market react to the fact that there are vaccines coming out. But I think as we see more of them come out, we see them being distributed and that people are taking them. I think people will go back to work. People will start shopping more. I think people will start to travel. And so I think we will see a very good 2021 in terms of the economy and how it performs. I think then we'll go back to more normal levels in 2022.
2022, what kind of activity will we see? Like more normal, as in
more normal, meaning kind of baseline what you would expect. I think we'll see a definite increase in spending and activity from investors, because many people have been sitting at home not doing much of anything, right? They haven't been going out to eat, they haven't been traveling, they haven't been buying much, you haven't needed new clothes to sit in front of Zoom, right? You can change your tops and have your pajama bottoms on if you want. So I think that people will spend and they will go out and enjoy life again. So I think everyone's looking forward to that. And I do think that will cause spending. I think also, with the change in government in the US, we're going to see some changes there. I think stimulus is expected to be passed, hopefully sooner, but definitely when Biden comes in, I think that they will get around that. And that's going to help the US economy also. So I think the U.S. economy will react positively, I believe, to Biden getting into office and stopping kind of this debate of what's happening right now.
Deborah, yeah, I like it. You call it as it is. We all call it leisure wear, but actually, in most cases, it is just pajama bottoms. So is it only when we have a catch-up? I mean, do we need to be a point in the economy where we have a catch-up of where we would have been had we not had the pandemic, that, that we see a big uptake in thematic ETFs?
I think we're already seeing that uptake. So for many people, they're looking at where should they put money to work where they think there's going to be a benefit. I think many people will still work from home. So I think technology that's going to be used in this environment where people might go back to the office certain days of the week. Not everyone's going to be in the office all the time. So I think technology, disruptive technology, electronic cars, thematic also crosses into ESG. I think healthcare is already seeing significant inflows where people feel they want to take advantage of vaccines. So all of these things are moving in the direction of where they see the post-pandemic economy moving forward.
Mm-hmm. Where do you see the biggest, ETF growth? I know we talked about thematics, but is there a country in Europe that will actually fare better than others in terms of investors wanting these products? Investors wanting these products. I think we've seen significant increase in the private banks in Switzerland buying ETFs. I think another thing that we've seen, interestingly, coming to market in Europe over the past couple of weeks has been more crypto products. So the only place in the world
where we actually have crypto ETPs is in Europe. And we've seen 2 new launches in the past 2 weeks. VanEck now has a product, WisdomTree has a product, 21 Shares has a number of products. And what we are seeing is the assets are actually growing in these products. So they're now up to 2.4 billion. It doesn't sound like a lot, but given it's still early days and it always takes time for people to get aware of the products, how they work, we are seeing now that the products are listed on the Deutsche Börse. And so I do expect that that will be another thing where many investors see this as an alternative to gold. And this year we did see very significant inflows into gold, many seeing that as a safe haven and also seeing it as a hedge to inflation, because many are concerned with all the stimulus coming into the market, do we have inflation coming and do they need some gold? And clearly, I think younger people and newer investors see crypto as a place to go as opposed to going to physical gold.
Great, Deborah, thanks so much. Deborah Further from ETF GI stays with us. Now, coming up, Vanguard took in less money in the U.S. in the first 10 months of the year than in any year since 2013. Here in Europe, it's scrapping its suite of smart beta ETFs. We'll discuss changing strategy at the world's second largest asset manager. That's coming up shortly, and this is Bloomberg. This is Bloomberg ETF IQ Europe, everything you need to know about the funds and the flows. I'm Francine Lacqua. Now, we're just getting a bit of news out of the vaccine. Of course, as we get into 2021, we'll find out a lot more about COVID-19 and the reaction also to these vaccines. The UK is now warning, we understand, according to a press association, that those with significant allergy histories should not take the vaccine. But we understand also that if you call up and ask for a vaccine, there's a number of questions that you need to answer and, of course, fulfill the criteria before you get a vaccine. So try not to worry. If you want a vaccine, call a hospital, and it'll, of course, run you through it. Now, the world's second largest asset manager is shutting its suite of 4 actively managed ETFs here in Europe. Vanguard says it's pulling them because of insufficient demand from investors. This comes as the company took in less money in its U.S. home market in the first 10 months of the year than in any year since 2013. The squeeze is also affecting its biggest rival, while BlackRock saw total net flows in the first 3 quarters of the year dip 12% from a year earlier. For more on all of this, we're joined by Sam Potter, senior editor at Bloomberg News, who runs our ETF coverage. Sam, great to have you on the show. These European closures are by no means the only shift in strategy for Vanguard. Talk us through exactly what else is going on.
Yes, good morning. Yeah, the funds in Europe, they're kind of notable. As you mentioned, they're active quant funds. They didn't attract many assets. It's kind of small in the scheme of things, though, because what's more notable is that Vanguard is making some bigger strategic shifts at a global level. In particular in Asia, where it's withdrawn from Hong Kong and from Japan. It's returned some $21 billion of government cash or government client money to China. And there have been leadership changes as well. So they have a new head of the international business, which they named in the last couple of weeks. And he's replaced like a 3-decade veteran. So it seems like Vanguard is being quite proactive, actually, and making some timely strategic adjustments. And these European funds are probably just a small piece of that puzzle.
All right. Thank you so much, Sam Potter, there, our senior editor, and we'll get back to Sam throughout the day. Still with us, Deborah Furr from ETF GI. Deborah, Sam was bringing us a very important story. What's the read across for other ETF providers?
Yeah, so I think these active products were actually in the smart beta space, which is a space that we've actually seen significantly less inflows this year than in prior years. Half of the inflows we would have seen at this point last year. So I think investors have moved away from smart beta. They've had a struggle trying to figure out quite often when to invest into value, momentum, quality, size, et cetera. So they've moved on to other strategies that are more thematic or ESG. So in some ways, it's not surprising. So I don't think it's just about active. I also think that the smart beta trend has a bit dissipated in terms of ETF preference for investors.
Deborah, I know we were talking in the break about some of the things going on in the U.S. What will be, you think, the most significant development over the next 6 months?
Yeah, so we see the advent of semi and non-transparent ETFs. So that doesn't mean they're never going to tell you what's inside of it. What it means is they'll provide transparency on a quarterly basis like mutual funds, as opposed to what's required daily normally. And so what we're seeing is Dimensional Fund Advisors has now listed 3 ETFs. They're active, they're transparent, but what they said they're going to do in 2021 is convert 6 mutual funds with $20 billion in assets into ETFs. So far, no one in the US has converted mutual funds into ETFs. There are some challenges around tax, dealing with investors who may not have brokerage accounts, but they're trying to work through this. So I think this is very significant. They're going to lower fees. And for Dimensional, this is really important because historically, they have only sold their mutual funds through trained advisors. This opens up investments to all retail, financial advisors, and institutions. So this is a big change. And so I think that most asset managers in the US are trying to figure out, what should my strategy be around ETFs? And they all feel they should have some kind of ETF offering. ETFs in the US are more tax efficient. That's not a benefit that we see here in Europe. But I do think that ETFs are just becoming a mainstay in in the US and Canada. And in Europe, I think investors are looking at ETFs more and more. And so I think the demand is growing in Europe, as we've seen grow over the years in the US.
Thank you so much, Deborah Furler, managing partner and founder at ETFGI. Now, that's it for this week's Bloomberg ETF IQ Europe. Of course, we'll be back with more, always, next Wednesday, 9:30 a.m. London time. We'll have a full roundup, of course, of the major news of ETF around the world, but especially in Europe. We'll talk trends, and also we'll delve into 2021 because, yes, it's already December. This is Bloomberg.